To build anything that truly lasts, it takes time.
The markets and in particular talking about the EMS category, and also there are a lot of news flows coming in for the EMS category stocks. Both fundamental as well as technical outlooks are very much necessary when we talk about stocks like Dixon Technologies. We do have a news flow on the back of which the stock will be in focus today, but what are the technical charts for the same talking about?
Good morning, Mansi. So looking at the recovery in last 3-4 weeks for Dixon, now stock is comfortably holding about to 20-day, 50-day moving average. This is the fourth consecutive week where stock is making higher high-low formation, which indicates that there is a sustained buying action is taking place in this counter. And the kind of recovery which we are witnessing on the daily, weekly time frame, I think we may see furthermore higher momentum in this counter and possible upside towards 16,300 to 16,400 we may see in the near term to short term perspective. So Dixon Tech, yes, definitely one can hold the position even if you get opportunity around 15,700 kind of zone. It's again fresh buying opportunity in the counter. One should keep its stop loss towards 15,550, possible target 16,400, and if it succeed to cross these level, I think then fresh buying or short covering action we may see in this counter, and then 16,700 would be the next target for the counter.
Okay, so 16,700 is the next upside to watch out for on Dixon Tech. But Rudra, I just want to come back to that antique note that my colleague Varun was talking about. 86 rupees price target for NMDC. That's a good 26.5% uptick from where the stock is trading at right now. What are the charts telling you for NMDC, and how quickly do you think we could reach that 86 mark?
See, for me, Snehi, when it comes to shorter term time frame on NMDC, stock is definitely showing sideways pattern and consolidation. Strong support for the stock right now is at around that 66-67 zone. So keeping that tight stop loss, which is very close by from current market price, yes, you have to wait out for at least 3 to 6 months if you have to see that kind of a 15-20% kind of a price move. So for me, if you are a trader for very short term, look at more stronger chart patterns. And just now Mansi was discussing about Dixon, another stock from the same sector. Look at PG Electroplast, PGEL, and look at the chart patterns. Just now it has given a breakout above that 805 levels, and stock is clearly headed towards that 880, 900 mark, and eventually it can even go to 1000. So I will still pick up stronger counters like this, or even for that matter, keep aside the larger private banks like your HDFC, ICICI or Kotak, which has moved up enough. Look at PSU banks where still there is lot of strength. Canara Bank, PNB, SBI, or even for that matter, second tier private bank. Look at City Union Bank, look at Bandhan Bank, look at even for that matter, Federal Bank. All these are stocks showing definite strength. So for me, these are areas where there is relative strength, and I will definitely be here on the long side.
All right. Yes, EMS category is the talk of the town at present, and it's really good, doing good rounds. But around 2 minutes, 1.5 to be precise, when the markets will open up. A quick view, Mr. Rudramurthy, good morning on Rallis India. The company did post good set of numbers, post which we did see a positive reaction as well. Now, Nuvama is coming up with a latest report where they have maintained the reduced rating. However, the target price is revised from 182 to 202. What's your take on that? A quick view.
Mansi, the strong 20-day moving average and support for this stock is now at around 320. Definitely a buy rating on Rallis India. Wait for dips to those levels of around 320. Accumulate this stock. If you have it at current market price, hold on. So for me, this stock can eventually go towards that 400, 450 mark. So buy on dips, 320 is a good level to accumulate.
Okay, that's the strategy coming in on Rallis India. We have about a minute left for market open. Rajesh, quick view in terms of which sectors do you think could lead the churn today?
I think automobile and PSU bank could be looked at for intraday perspective. I think here we may see some traction on the higher side, and chemical basket is also looking promising. So I think these three sectors one can look at for trading perspective. So from chemical, SRF, PI industry, these two stocks are looking attractive. From PSU basket, SBI is our preferred choice at this juncture. I think SBI can extend its gain. And from automobile, Bajaj Auto, as well as Hero Motor, these two stocks can be looked at for intraday perspective.
All right, so that's the take coming in. Well, the global setup looks not so optimistic, where the question is, will the Indian markets open on a flat note, or
then possible rally can extend and short covering action may trigger to take Nifty further higher to 25, 300, 350 zone. So yes, buy on dips is the strategy at this juncture. 25,100 needs to keep as a intraday stop loss. And I think if we analyze the opening trades, like, IT stocks is also now, surprisingly moving higher. And some of the stocks ahead of earning, like Tech Mahindra, is also showing some buying interest. So I think a lot of corrective move is already done in most of the IT stocks. And I believe that, this sector can also give some, positive surprise going forward. So IT could be another sector where one can deploy some buying action, buying trades in this consolidation phase, and we may see some upward momentum in IT stocks also. Another sector where we are focusing post opening, that is real estate space. I think DLF is the stock where we are focusing. So DLF one can buy and accumulate 825 should be your stop loss. And I think DLF has potential to continue furthermore upside, and 855 to 860 would be the next target. So IT is looking a little interesting post opening. I think Tech Mahindra, Infosys, these two stocks are on focus on the buying side. So I think one can look at these stocks for intraday point of view.
so Tech Mahindra and Infosys, two counters, and post TCS and HCL Technologies, it's Infosys, Coforge, Persistent, Tech Mahindra, all of the companies which are going to come up with its numbers in the coming days. And we need to keep an eye on the mid-cap IT players along with the larger players as well. And these segments are coming on the radar yet again. Mr. Rudramurthy will come to you as well for your opening trades, and also keep an eye on Dixon Technologies, which we just discussed just before the market open. But in the meantime, we also have Neeraj Diwan with us, a market expert, joining on ET Now. Neeraj, good morning. Thank you so much for giving your time to ET Now. It's a pleasure talking to you this morning. Mansi this side. So Trump tariff and tantrums, that is going to continue, and we see a lot of advancements and developments coming in from there. One thing we can't negate is that uncertainties and contingent scenarios will persist. But what do you think will be the scenario and the market picture in this quarter, because earnings season has started and we see a lot of news flows coming in for the domestic markets right now?
Yeah, good morning. Definitely, it will depend on what kind of results come out with, because tariffs is one thing which everyone is waiting for, and that news should come sometime during this month. But post that, I think the focus will again shift to what is happening on the earnings front. So I'm expecting decent set of numbers to come from at least the financial basket is concerned, and even we have to watch what kind of numbers are coming as far as the orders are concerned for infrastructure, capital goods segments. So I think one should focus more on that, and then there is again, because of low inflation, we'll have to keep a watch on what is happening on the discretionary and non-discretionary, the consumption front, and whether pickup demand is happening now. So what will be more important to watch will be this quarter and follow up to the festival season. So that is what with the kind of interest rates, inflation we are at. So domestically, things are better placed for a good, post monsoon, a good festival season. So that is one we should watch for, in the commentary post result will be very important to listen to. We will keeping a view on this.
Okay, so that's the take on the market setup right now from Neeraj. But Rudra, we'll come to you. Give us your sense of the way you've seen the market open today. Of course, strength was continuing in Nifty Bank, but that's also barely, very nominally holding on to green right now. So some pressure is building on the market right now. And for Nifty, we've slipped below the 25,150 mark. Rudra, what's your take on the market open, and where are you placing your first trades for the day?
Sneha, I'm very clear, even though we have seen some amount of profit booking, you should not ignore yesterday's move, which was very, very strong. And we are holding 25,000 strong support. For short-term liquidity is definitely strong. And yesterday we have seen DIIs, FIIs turning on the buy side. So for me, till we hold 25,000 on Nifty, use every dip as a buying opportunity, but be very sector specific and stock specific. It is not buy anything kind of a market. And very important, Snehi, you said Paytm is giving a big move and it is a surprise. For all those who watch DT now from morning, in our show clearly Rudra recommended Paytm and Bandhan Bank. Paytm is not a surprise, and for me, even at current market price, it's a buy. I'm looking at 1050, 1100 to come soon. Stock available in futures. Morning I recommended Paytm. Even after this 1.5% kind of a move, it's a buy. And Bandhan Bank is another stock morning I recommended, and that is looking strong. So at one side you are seeing some time-wise consolidation in overall market, but stock-specific moves like PSU Bank, second tier banks like for example Bandhan Bank, Federal Bank, City Union Bank, PSU banks like Canara Bank, Punjab National Bank, SBI looks very strong to me. So these are all specific stocks and sectors which you can focus on, and market is consolidating time wise. So I am not a seller, I am not shorting this market come what may. Till we break 25,000, this market is a buy on every dip. And even look at PG Electroplast. The EMS as a space will do very good. Dixon is one counter, and for me PG Electroplast is another counter. So you have lot of stock specific buy recommendations, and these are relatively doing very strong. So I will definitely remain bullish on this market for short term. Let 25,000 break and then we can take a short term call on the sell side. But till then, every dip is a buying opportunity.
Okay, so that's the take on the first trades right now. But Neeraj, what is your sense of the kind of move that we're seeing in some of these PSU bank stocks today? It's a mixed market setup coming in right now, but PSU banks are emerging as the top winners right now. Some of them are holding on to good gains, the likes of Punjab and Sindh Bank, you have IOB, UCO, all of them are doing well. What's your take on the PSU banks, and what are you liking from this basket?
So I am positive on the PSU banks, one, because now the balance sheets are very clean and they have the capability to lend a lot with the demand coming in for credit. I think with the interest rates coming down, initially, that what we've seen was a little bit of pressure on the names. I think that will start easing with more demand for credit. So I think going ahead, most of the PSU banks, just to name 2, 3 ones, which I'm positive on, something like a Canara Bank, or a PNB or a Union Bank. These are among the top in my list. I think the valuation-wise, they're quite attractive, and they're well poised for a good second half this year. So these are the ones which I'm preferring as far as the PSU banks are concerned.
All right. Taking a look at the life insurance set and talking in particular about HDFC Life, well, the numbers on a year-on-year basis were still okay, but the numbers stood weak on a quarter-on-quarter basis. Rajesh, not to forget the value of new business VNB margins, which were flat both on a year-on-year as well as quarter-on-quarter basis. And also we have a few brokerage reports which are coming in for the same. What's your take on HDFC Life, because the stock is still performing after the set of results which have come in?
So Mansi, looking at the near-term, short-term structure, there is a breakdown of upsloping channel on a weekly chart for HDFC Bank. So looking at the breakdown on the lower side, if it continues to trade below 775, 780 zone, I think some pressure would be there, or some profit taking we may see in this counter. In this corrective move, now stock is trading below to 20-day, 50-day moving average, which is also adding up some weakness on the counter. So I think maybe we may see some pressure in this counter going forward on the downside. 745, 740 would be the next support area for this corrective move. On the higher side, until the stock not crosses suppose 785 zone, I think trend is likely to exhibit on the slightly weaker side for the counter for near-term perspective. But overall, long-term structure is bullish. So those who are looking for investment opportunity, they can use this decline as an buying opportunity for long-term perspective. But traders can wait for further more decline towards 755.
Okay, that's that
on HDFC Life reacting to its mixed bag of earnings. In the meantime, just looking at some of the other buzzers in trade, Keynes is holding out very nicely. IDFC's first has spurt up about almost 2%. There's Dixon, which is higher by 3%. And then Biocon is the one which is topping the charts today.